Hello everybody and welcome to this video where we'll be running over the top 4 hydrogen stocks. So similar to the solar stocks that we covered in a very recent video, the hydrogen stock has been on fire. So if we first took a look at the stock performance of these companies, we obviously want to understand whether they're in an up or a downtrend. And as alluded to, if we look at the stock price performance for the last year, we can see that BLDP has gained 254%, FCEL has gained a stunningly 731%, Plug has gained 502%, and B has gained 547%. So there's definitely been a lot of hype on these stocks in the last 2 months. What is quite interesting is that even though there's high expectation that hydrogen will become a vital important part of the energy mix, it is not a new thing. It has been around for a long time and it was also hyped in the early 2000s. So it is kind of like having a revived moment these days, and it's going to be very interesting to see if it can keep up with this. Next, we want to take a look at the income part. And if we take a look at the net income, we can see that there's red flags across the board. All these companies are losing money. The net profit margin, obviously negative, 38.61% for BLDP, minus 162.42 for FCEL, minus 31.75% for Plug, and minus 32.9% for BE. So again, these companies are not earning any money, and some of them has been around for quite some time, like BLDP, but they have so far not managed to turn this into profit. Some of the companies expect that this will happen within the next 4 to 5 years. So when that is the case, we obviously want to understand whether these companies have sufficient money to cover this net loss that they're incurring on a yearly basis. You can also take a look at the B-niche score, which is just a mathematical model that determines whether a company has manipulated its profits. We want this to be below minus 2.22, and we can see all the companies with the exception of Plug are living up to that. You can also take a look at the Sloan ratio, which just identify whether a substantial part of earnings are non-cash accruals. We are not interested in this, so we want this number to be between minus 10% to 10%, and we can see all companies with the exception of BE, which has a minus 18.11, are in the red zone. So if we take a look at the overall ranking, we first looked at the trend of these stocks, and by no surprise, all of them are in what we consider an uptrend. On the net income part, all of them are losing money and has done that for quite some time, depending on how long time obviously the companies have been in business. And on the net profit margin side, the best among a lot of bad numbers, Plug Power is the best, followed by Bloom Energy, Ballard, and FuelCell was doing exceptionally bad compared to the 3 others. Next, we move into the return metrics, and we want to understand how high returns and cash flow margin is being generated by these companies. And again, no surprise here if we look at the return on invested capital that all of them are delivering minus results. The worst one is BLDP with minus 17.21, FCEL minus 10.28, Plug minus 12.62, and BE minus 9.15%. The same on the levered free cash flow margin, BLDP minus 37.95%, FCEL minus 108.64, really bad number. Plug has a minus 47.18%, and BE actually doing quite respectable here with only minus 3.53. So when you're analyzing companies who on a consistent basis are losing money, it becomes extremely important that you do a deep dive into the balance sheet and ratios and understand how strong the financial position is of the company. So if we first take a look at the current ratio here, we want this to be above 1, and we can see all of them are delivering nicely on this. They have more current assets than liabilities, so that's good. An even more important metric is the cash ratio, because that shows how long time they can sustain their cash burn. And we want this in general to be above 1. BLDP 3.06, so really good. FCEL, okay, 1.32. Small red flag here on plug, 0.97, and really bad for BE with 0.61. And why is that? Yeah, if we look at the cash ratio of BE, for example, they cannot even cover the last 12-month loss. So if they have a similar loss in the next year, then they're going to have some issues. Plug can sustain it for around 2.5 years, so looking a bit better. FCEL, again, can sustain this in less than a year, so not good. BLDP, again, the best, they can sustain this for around 3 to 4 years. Next, we can also take a look at the total assets versus total liabilities. We want this to be above 1.5, and we can see BLDP doing the best again with 4.70, respectable for FCEL and plug, and again a major red flag with BE on 0.84. Similar story for the debt equity, BLDP doing the best, FCEL doing respectively okay but not fantastic for plug with 2.27, and again really bad here for BE with minus 4.23. So again, really not good numbers on the financial side for BE. That's quite of a warning flag for me. We can also take a look at the Altman Z score, which is a critic strength test that assesses the likelihood of bankruptcy. Want this to be above 1.8. BLDP, no issues, 29.37, really good. FCEL, minus 2.46, big red flag again. Plug, 3.18, really good. And BE, minus 2.03. On the Piotrowski score is another way to assess the strength of the company's financial position. Surprisingly here, we want this in general to be equal above 5. Surprisingly, BLDP is scoring really bad here. FCEL, plug, and BE is scoring better. However, Piotrowski score only look for the last 12 months, so that may be the reason. And I would say I prefer in general the Altman Z score above the Piotrowski score. So back to the overview. We first looked at the return for these companies and the return on invested capital. Again, it was not fantastic for any of these companies, but Bloom Energy doing the best, followed by FuelCell, Plug Power, and Ballard. Undelivered free cash flow margin, Bloom Energy again doing the best, followed by Ballard, Plug Power, and FuelCell. An even important metric for me for these companies is on the balance sheet, and we first look at the total ratio. Ballard doing the best, followed by Plug, FuelCell, and Bloom Energy, and a similar story almost on the debt equity, where Ballard was doing the best, followed by FuelCell, Plug Power, and really poor number again for Bloom Energy. Next, we move into the shareholder yield part, and we want to understand whether any value is returned to shareholders. No surprise for these companies, they're all losing money, so none of them are paying any dividend out. If we take a look at the buyback yield, that is actually quite interesting for these type of companies, because this illustrates how much more equity they're seeking through issuance of new shares, which will dilute the value of the company. So we want this obviously to be positive for this type of company, but we also do understand that it's probably not likely with their current situation. BLDP minus 1.63, nothing really, it's not too bad. FCEL here minus 13.35, bit red flag for them. Minus 2.23% for Plug, which is okay but not fantastic, and actually the best with minus only 0.39% for BE. Also very important element is the earnings per share and growth. Obviously the PE ratio is negative for all these companies. If we go to the earnings per share growth forecast for the next 5 years, we can see that for BLDP it's almost stagnant, 0.03, so nothing to really be too excited about. FCEL 15% respectable, and Plug and BE both doing really well here with 25%. Then we can take a look first at the revenue growth for the past 5 years, and we can see that BLDP is delivering respectable, FCEL negative 2.95%, not good. And Plug and BE has done extremely well with 36.70 and 44.90%. And this could be one of the reasons why the share price have not been slammed as much when you look at all the other numbers. However, what surprises me a bit is if we look at the revenue growth for the last 12 months, we can see that BLDP is a positive on 9.16, FCEL really poor with minus 17.54, Plug respectable 18.31%, and BE has a negative on 6.22. Really surprising when you see the numbers for the last 5 years. You would expect them to actually deliver revenue growth. So for me, this is again a small red flag for this company, even though they have managed to grow in the last 5 years. Lastly, the net profit growth for the last 12 months, BLDP minus 32.05, not good, and this is something they need to look at. FCEL doing the worst again here with minus 46.73. Small net profit growth on 1.22 for Plug, and a very impressive 41.64%, 65% for BE. So even if the revenue haven't grown, their profitability has improved. So that's a really good sign, and a little bit compensation too that the revenue growth has not really been there. So back to the overall overview, we looked at the EPS growth forecast for the next 5 years. Plug Power and Bloom Energy was doing the best with 25%. FuelCell was doing okay with 15%, and very small change on 0.03 for Ballard. On the revenue growth for the last 12 months, Plug Power has been doing really well, the same with Ballard. Surprisingly, a minus for Bloom Energy, and really poor performance for FuelCell. On the net profit growth though, Bloom Energy was doing extremely well, Plug Power was doing acceptable, followed by Ballard and FuelCell. Alright, finally we want to understand whether these companies are currently under or overvalued. One way is to look at the PEG ratio. However, as all these companies have a negative PE, it is not worthwhile because we cannot calculate it from that. If we take a look at my own estimated intrinsic value, which is based on a lot of different numbers and assumptions, you will see that for BLDP, it looks like there's an upside on 7.58% on them. On FuelCell, minus 4.58, minus 16.82 for Plug, and a small downside on 5.88% on BE. We can also take a look at the beta ratio, which just shows the stock's volatility in relation to the overall market. And as we can see here, all companies are above 1, which means that they are more volatile than the general market. Next, we can also take a look at some other value indicators. One is to look at the book value per share, and if it's above 1, it's undervalued. If it's below 1, it is overvalued. And all of them are very clearly overvalued. You can also take a look at the relative strength index for the last 14 days. If it's below 30, it means it's oversold, and there's an indication of a reverse uptrend. If it's above 70, it is considered overbought and may do a pullback. We can see all of the companies here are a little bit above the middle, but there's no clear indication whether it will go into overbought or oversold territory. Lastly, we can also take a look at the analyst recommendation, and again, they often have their own interests, so by no means I'm following them blindly, but it's good if they also have the same view as the numbers are telling me. So we can take a look at the consensus price target, which is just the middle ground of all the estimates of the analyst. Some will have a higher price target, some will have a lower. And what we can see is that they believe there's an upside on 20.85% on BLDP, a huge downside on 37.24% on FCEL, similar downside on Plug on 35.34%, and a small downside on BE on 5.81%. So if we take a look at the overall value assessment of these companies, we believe that Ballard is undervalued and all the others are overvalued. Given the numbers that we have looked at in general, I actually don't think this is such a big surprise, Ballard is showing quite good numbers, and they have increased quite a lot over the last 365 days. However, they have not increased in share price anywhere near the others. The others have had a massive growth, which could be a lot based on hype, I would say, because even though there's big expectations for hydrogen in the future, so far it has not materialized, and none of these companies have delivered positive result. So there's a bit of a speculative going into all these companies. So all these companies have experienced massive growth in their share price and has been really good investments for the one that timed this at the right time. Would I say that the increase in the share prices are justified in the numbers? I'm not really sure when I look at both the revenue growth and the net profit growth of these companies. They are all losing money. A lot of them do not have strong financial positions, so they most likely have to get more equity somehow, and that can dilute share price value further. So I'm a bit hesitant to jump in at these levels. However, based on that the stock is currently in uptrend, it has an extremely strong balance sheet. It had a revenue growth of 9.17% over the last 12 months, and it's the only undervalued company. We would say that Ballard is our top pick today, but I would also say that we will only add it to our watch list so far and wait and see what happens. Maybe the train will leave the station and it will just continue to go up. However, we believe that there is a bit of a risk that these companies have experienced too much growth in the share price too fast, and they may need to get a bit back down again. But again, if this happens, we will definitely consider to enter into a position in Ballard. As goes for the other companies, Plug Power and Bloom Energy, we will also add them to our watch list. So far, we do not see them as being as attractive from a valuation perspective, even though both of them has had a good revenue growth, with the exception of Bloom Energy for the last 12 months, and also on the net profit growth. So if they can continue this trend, they may also become very attractive plays. But as of today, we feel that they're a little bit overvalued. And I think for all the companies, we would have to see that they are able to turn the red numbers into green before we would take a big position into them. So that's what we are seeing today. FuelCell, not interesting at all. They are scoring really bad across the board and does not really have a compelling story from the numbers. This was all we had for today. We hope you enjoyed this video. Please subscribe, like the video, provide a comment. Also for improvement suggestions to us, we really appreciate the ones who have doing that so far, because that's the only way we can improve the content. Please also note, we are not professional financial advisors, and you need to do your own due diligence before you take an active investment decision. This is purely for entertainment purposes. Until next time, stay safe, have a good day, bye.